Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Dr. Merav Ozair, global leading emerging technologies expert, and Richard Rosenthal, principal of risk and financial advisory over at Deloitte. We're here to discuss how the Genius Act could have broad ramifications beyond just stablecoins by altering how money is viewed, transacted, and engaged within the U.S. and beyond. It's great to have the both of you with us. Welcome to Trade Talks. Richard, welcome to the show. The Genius Act, it really was a watershed moment, not even just the act itself, but the administration's priorities as it relates to the digital asset space.
Yeah, I think it's really a watershed moment. It really is a comprehensive framework that establishes who can issue stablecoins in the U.S. And I really think it goes beyond that, because I think it legitimizes the entire digital asset ecosystem. In many respects, I think it is a game changer for the industry and will affect how money is transacted in the U.S. And it is forcing many traditional banks, fintechs, non-banks say, how do I want to engage? Am I going to be an issuer? Do I need to now think about sending and receiving stablecoins as payments? And I think it's notable from a bigger picture global perspective in that it is probably one of the more comprehensive attempts at this. I mean, MiCA in Europe, but I think the U.S. is really a lot of attention on maybe how commercial this framework is and what it enables people to do.
Yeah, and Merav, that was what the world was waiting for all intents and purposes, to get scale out of the digital asset ecosystem, was some sort of framework out of the U.S.
Yes, I mean, that was something that everyone was waiting for many years, because the EU, moved very fast. They always move faster, when it comes to regulation, especially, when it comes to the digital space, internet, etc., and protection and everything. So they were first. But it seems, that everyone is looking at the U.S. because this is the bigger market. Most investors are in the U.S. The largest institutional investors are in the U.S. So everyone was looking for a green light from there. And I think that that's kind of opened the door, in a very big way. But at the same time, it creates some kind of a fear to some extent with the other jurisdiction. I mean, like the EU, the entire, system, they are very, fearful with how that's going to play out, whether they're already feeling that they're losing some control and sovereignty. And I think that if everyone is going to use, the US dollar stablecoin, where they're going to stand,
right,
with a euro.
And I think Richard's asked what the question is there a risk of proliferation of stablecoins and figuring out which one to use? Could it potentially, cannibalize the whole thesis behind this?
Yeah, no, I think at first it's helpful to kind of start off too, like, what is a stablecoin? And there's a lot of nomenclature issues out in the industry. There's also tokenized deposits, but I think at the end of the day, we have a framework that's going to incentivize people to consider issuing stablecoins. You can think about a lot of different companies that want to incentivize behavior. Hey, you buy this product, use my stablecoin, I'll give you 5% back. Or, hey, if you move money cross-border within my ecosystem, you get some benefits. So I think companies right now are saying, can I embed stablecoins in the way that I do business? And it's a broader set of companies. As an issuer of stablecoins, you can be a non-bank, you could be a technology company that is predominantly engaged in financial services, and you have a path to be an issuer. Yeah. So I think we're going to have a world, at least my view is that we're going to have lots of stablecoins. That being said, I think there's only so many that can win out, because when you think about how vendors and customers are going to interact and really display stablecoins within exchanges and wallets, how many can you realistically have?
Yeah, I mean, to Richard's point, when you're talking about rewards, I think that JP Morgan, they've always been like, the forefront, when it comes to blockchain, that they've been doing it for 10 years. But they partnered with Coinbase, and what they're offering is now you can convert the rewards points, rewards points to the Circle stablecoin. So, and I think that's coming early in 2026. So that's happening already. I mean, if you have, if you are a customer of Chase, then if you have rewards points, you can convert them to stablecoins, one to one. like like dollar, regular dollar. So that's interesting. They're already doing it, and I've already many times I always you know that I've been talking about that tokenizations and everything, and I think that idea of tokenizing and rewards. Like if you have all kinds of points, whether it's Starbucks that gives you points and Amazon gives you points, and now they have the incentive. Okay, maybe these points also will be converted into stable coins instead of just points.
But isn't like credit cards? I can convert my Amex to an airline. I mean, how is it different than traditional rewards programs? I think
it's not any different, but now you have a different rail that supports stable coins, so why not use it?
Right.
If there is an incentive to use stablecoins,
right.
then why not use it? You're giving the customers an alternative, and that also opens the door. So if I can convert these points to, let's say, stablecoins, then that will be an easier, a seamless bridge to engage with the crypto space,
and maybe
something that I cannot do through dollars.
Yeah.
And if we just take a step back too, like how is the stablecoin issuer allowing and incentivizing people to share in this benefit or yield? The yield on a stablecoin is largely, stablecoins are backed by treasuries, money market funds.
Yeah, I think that they're not allowed to bear any interest.
Directly to customers.
Directly,
to customers, stablecoin issuers cannot pay interest. But there are business models right now being, in market where you can get a reward on a stablecoin product because I can have a business development relationship with a third party, and then you distribute the stablecoin, and so at the end of the day, the stablecoin is earning a yield, and we're not using credit card rails, we're not using wire and ACH, and so can the issuer earn that yield and share it to make that distribution and ecosystem happen? And my view is that is why it is a bit of a threat to the bank, to banks, because where's that money come from? It's coming from deposits. If people think there's another yield-bearing product that they can invest some money in, we saw this with money market funds, and this is why I think this has to be taken seriously.
But they can do what JP Morgan is doing right now. They just issued the JPMD tokenized, which is basically a token that is attached to a commercial deposit that on Chase. So this is yield bearing. So if they're doing it already, and the smart point that they're doing here, this is really very interesting. They've always been like they really read the map very very clearly, because they already have their own private blockchain, right? Kinix, etc. But this token that I just mentioned is going to be launched on Coinbase public blockchain, which is Base, which is like a layer 2 to Ethereum. So they want to engage with a broader, customer base, not just on their own private blockchain. So they launching it on a public blockchain. So they're already seeing, where this is going. So they're always, looking like very much.
But wouldn't it change how you're regulated if you are not a traditional financial institution, like you had mentioned before? If you're a tech company and then you use it as a way for cross-border payments and so forth, I mean, that could change the way that you're regulated, not only globally, but in the U.S. as well. You could fall under the financial institution categories.
Correct. So I mean, clearly, Genius focuses on who's the issuer of the stablecoin, and it sets a regulatory framework both at the federal level and the state level. But if you're processing stablecoins, if you're moving them cross-border, you still have AML. Compliance regimes. And in the U.S., we have all the money transmission laws, and we have FinCEN and AML. So I do think where you're going with that question is an important point, in that, like, we're very focused on who could be an issuer. We're very focused on what are the role and use cases for stablecoin, rightfully so. But the real work now is how are we going to marry that up with regulatory expectations, control expectations, and some second-order issues, fraud, privacy, AML.
See, I think that is a huge part of the equation, as it relates to financial privacy law, cybersecurity, global privacy frameworks, and so forth. That is subject matter expert 101. It is incredibly complex, in addition to the technology behind it. That's a whole separate conversation.
Clearly, and I think the Treasury did an important step too. They issued an RFI asking the industry for help in actually looking at best practices issues. I mean, people have been working on these topics.
Right.
I think it's also important to say the New York Department of Financial Services, a regulator, the state level has been administering a bit licensed digital asset regime that has set forth some very helpful set of expectations on AML compliance controls. But to me, that's like the real work. And there's this, you know, if we take a step back, there's a little bit of this tension between decentralization and centralization happening here. We have a product that's saying, okay, we want to use blockchain rails, we want to move money, but how are we going to do that? And by the way, it's not just, it's also what customers like. Customers like the payment rails they have today. They also like to dispute and get money back. There's a lot of things that need to be worked out. And so I think that's where the industry, that's where we collectively need to focus is, how are we going to, how does this work?
But I've been in this industry for a very long time, and I remember, you know, when FinCEN, came up with this, I mean, a few years ago, with the legislations about illicit transactions and came with digital assets. I remember that, you know, a lot of companies, you know, I mean, that the startups, you know, in the crypto space, you know, came up with solutions, you know, very viable solutions. So I think some of those solutions can be applied now for stablecoins. Why not? I mean, the solutions are already there. People have already been thinking about that in the digital space. So this is just a matter of, you know, now applying it. So, I mean, it's
I mean, why can't it operate under existing framework, right, as it relates to how it's being controlled, who's processing it, how it's being reported? Why can't it just kind of plug itself into that framework? I mean, it exists.
Yeah, it exists. I mean, and this is what exactly those you know, solutions that I remember that people were working on even like 3-4 years ago, even more when all this came about. Then they are, you know, taking into considerations all the existing regulations, and now putting them in the right applications and the rails and the smart contracts and how that's going to work. With all the privacy, security, and you know, making sure, you know, that it has all the you know, consumer protections and all the other, you know, illicit transaction and everything that we're talking about, AML and everything.
Richard, let's talk about it from practical applications as it relates to how corporates are interpreting this, because not only are they thinking about, you know, how do I triage my resources to AI investments, to digital asset investments, how are they thinking about developing the use case and the options around that?
Yeah, I think it's a great point, and I think this is where there's a lot going on right now, both, you know, for banks, fintechs that are saying, okay, am I going to be an issuer? What do I do on tokenized deposits? What products do I offer? And what is the real utility for the corporate?
Right.
What is my corporate customer going to get? By the way, is the corporate customer even asking me for this right now? I would say some are starting to dip their toe into the water. We did a survey. I think something 15 to 20% said they would start to use stablecoins as a means of payments. But you still have to deal with vulnerability, security issues. We're talking large value transfers for corporates that move money. Are we comfortable with these moving on blockchain rails? These are all questions. This is for an industry that went through a banking crisis a year ago where there was still a lot of vulnerabilities there. So this is the work that I'm talking about that needs to happen. Now, on the corporate side, I think some of those folks are also saying, can I use this in how I move money internally? Can I maybe, if I'm a product or technology company, can I offer stablecoins as a way to incentivize discounts, ways of incentivizing behavior? So in the same way, banks and fintechs are working through their use case options, which I think are unique. Corporates are also saying, how do I need to think about it? Do I need a wallet? How do I send and receive payments? So it is really kind of a paradigm shift for the entire industry.
Yeah, but I think now it's a good time to think about it because, you know, with all the AI that is happening, and I think there is a relationship between the evolution of blockchain with AI.
Totally.
Because we do need blockchain to be part of AI in all the, especially when everything is going to be automated. How is that going to work? You know, we need tokenizations and stable coins and all these digital wallet rather than, you know, a bank account. So that makes sense. And I think the evolution of AI, which is happening, and we know it's happening, that will bring the incentive to use this route and think about all the other how can I bring benefits to my consumer base, whether it's rewards, whether it's deposits. How am I going to facilitate? If you're doing something with an agent, how that's going to be facilitated. So all of those things, I think going to play out. And now that we have all this AI and blockchain, I know that I've been talking to companies now, and I know that they're thinking about this combination.
But I think that's a good point that Merav brings up, and aligns well with what you were saying, Richard, because you also have to internally make sure that you're prepared to execute on this.
Totally.
Do you have the skill set to implement the appropriate governance? I mean, we're trying to figure that out now as big data and AI is evolving. What does that governance look like? Is it something that's going to be sustainable? Is it something that we're not going to be thinking about 5 years
I think that's a great point. It is a talent question. It's kind of a lean-in moment. I do think people have kind of whiplash in this industry to say, is this 2012? Is this 2017? And I think the one message,
to stop saying that.
I think you would agree with this, but this time does feel different.
Yeah.
There really is. We're at an inflection point, and it's not just stablecoins. It's equities. It's bonds. It's the Chair Atkins of the SEC has said he wants to move capital markets on chain. Okay, so it's payments, banking, and so for all of us, for the industry, this is that lean-in moment where okay. We a lot of the usual products and use cases in AML, yes, there's some novel risks. Yes, there's some different tools, but you've got to kind of start working through that now. And I think that is the advantage that companies that have been innovating in this space have. The folks that have been launching products, that have kept their digital asset teams together, that have stayed,
right.
Because every day there's news on this.
Right.
I mean, every day we see market developments. It's happening right now.
Yeah, but and I think again, I'm sorry that I'm coming back to that, but the AI evolution is going to force that. And I think for the first time, we have starting enough to have some clarity on blockchain, some clarity on AI, and that's going to really, this synergy is going to come together. That's for the first time. It's not 2017 or 2020 when it just was only this and only that. Now they're both coming together. And you do have, and everyone was saying, what is, the application for blockchain? Everyone was saying, I mean, it's like blockchain is looking for an application, right? That was, the critics about that. But now AI is a great application.
Yeah.
And so that makes sense.
But you made a great point about whiplash because, think about it, just over the past 6 to 7 years, everything was being migrated to the cloud. Then we were forced into a hybrid environment. Then we were forced to test the capital markets and its resilience, which was successful through COVID. Then you have all these emerging technologies like LLMs. Now we're on agentic AI. Now we're understanding the use cases of blockchain and so forth. And that's a lot to digest in under a decade, right? And if you want to make sure that you're doing a good job, not only internally, but it makes sense for your customers. You're solving problems that they have, and not just throwing something at the wall because this is the technology that's in the news cycle right now.
And in an environment where we have all your points about macroeconomic changes, but then also administration changes that have been significant. And so how do you design business models that are lasting?
Right.
That actually get to, and I do think the point you made about the intersection of AI is important too. And digital assets and blockchain have utility. They don't necessarily solve every problem either.
No.
So just like in AI, we need to be thoughtful about using utility. I think we need to do the same thing. Let's lean into the stablecoin thing and say, is it a viable payment rail? Yeah, probably. Does it work? For domestic payments, is it any better than, wire ACH, some of the stuff that we have going on? Maybe, maybe not. But you might have some customers that want to do it and engage in it, and you might see some, if you could imagine a world where you have a lot of stuff on chain and stablecoins are a cash equivalent instrument, I could start seeing some real utility.
I think that.
All right, we have to wrap. 30 seconds.
I think it aligns, with the survey that I just read from Fidelity that they're saying I think about 26% of retail customers are using digital assets, and about globally 56% of institutional investors are using digital assets. So that kind of like merge, very, very nicely into all this stablecoin, concept, I think.
Well, it is good that at least we have the framework there.
Right.
And there is at least some sense of stability. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.